All right, Zingers, welcome to an impromptu video here. I know we've seen a lot of commotion in the market the past few days, so I brought in two experts to talk about it here. We've got Big Beat and we've got the head of our news desk, Brent. So, gentlemen, thanks for joining us. Hopefully you guys are doing okay. Hopefully everyone's staying calm over there.
Absolutely. I mean, this market I've been pounding the desk for how long, Ryan, that the market was overheated, and here we are. And I think I've said it several times, Warren Buffett has said it best. When the tide rolls out, we'll get to see who's swimming naked. So here we are. What do you think, Brent? Is the news really affecting this?
I thought you were going to say the be fearful when people are greedy, be greedy when people are fearful thing by Buffett. But
I mean, blood in the street is my favorite saying by Warren Buffett, so I can keep going on. But I agree, yeah.
Yeah, things are collected at the Benzinga HQ here in Detroit. Nobody is really freaking out too much yet or anything, so thankfully.
And that's one of the things that I actually want to start off with here, and I'd like to get your opinion on both of this. To me, although this has been an incredibly steep sell-off the past few days, very high velocity sell-off, it does still seem orderly. I don't really notice any halts. I don't really notice anything unorderly about the sell-off other than the eye-popping numbers. Do you guys kind of feel the same way? Am I off base here or what?
I'll take this. Look, it's very simple. We've been talking about it for a while. This whole week is the biggest sell-off in the history of the market. Now, when I say that, is that meant to scare anybody? Because we've had some big sell-off days, right? I remember days coming in and sitting down in the chair just like now, and we either coming up 500 points or down 500 points. I mean, oh my God, it was crazy back then, right? Today, 500 points, 1,000 points, we don't go nuts over it too much, but it's still kind of rough.
VIX is getting close to 30, right? I haven't looked at the VIX in the last couple minutes here, but it was about 29 or so. And I kind of agree with you, Ryan. I think that yesterday was kind of like our first really volatile day, given that we, came all the way down, rallied all the way back. I think SP 500 futures actually turned positive for a minute. And then we had that ugly close. That was one of the ugliest closes that I've seen in a while. Before yesterday, I think that we were kind of just going down in a straight line. There wasn't like a lot of like up and down. It was just pretty much straight down. And I think that's kind of what you're saying, right, Ryan?
Yeah, you hit it exactly right. I agree. I also agree with you. The close yesterday was real nasty, but to me, it seems like this sell-off is not, I personally don't think the world is ending. So maybe it's my bias leaking in there, and if that's the case, I'll accept that. But I mean, it just seems orderly. It doesn't seem like there's a lot of panic. I look out on Twitter, I see a lot of seasoned traders telling each other to relax and all of that, and I feel like cooler heads are eventually going to prevail.
Ryan, when you say it's orderly, are you saying that are you seeing round lots in the volume, or are you seeing big ones coming in on the JP Morgan? Are you seeing level 2 bids and asks coming in flat, or are you showing lopsided imbalances?
Yeah, so it's a little bit of both. I think one of the things about the sell-off being orderly is that you're not actually getting what feels like these gigantic flushes, or people like to use the term flash crash. I try not to use the term crash just because that to me that's not what it feels like at all. It just feels like it's just everyone selling. It feels like what you were talking about, Steve, where you said that people were looking for a reason to sell. We thought the market was overheated. Pretty much everyone was in agreement with that, bulls, bears alike. And we were looking for a catalyst to sell. Brent, I believe you said the same thing not long ago here. And I feel like that's kind of what's happening. You've got these catalysts. You've got actually several catalysts that may be playing a role in this. The coronavirus is the one where it's obviously it's plastered all over the TV and the media. It sounds really scary, a disease that's spreading, that's new, and people are dying, and this, that, and the other thing. And I mean, it seems to me like if this was actually a panic, the sell-off would be much more fierce. You would see halts. You would see just people dumping everything, and I just don't see that.
Well, let's be honest here. The Dow's down 3.5% at 7%. Comes on the first circuit breaker, so we're pretty dang close to some circuit breakers hitting here.
Yep. And talking real quick about halts and circuit breakers and stuff, the kind of counterpoint to what we're saying, Ryan, about it being orderly, that I just started noticing as of yesterday, and I look at these headlines throughout the day, all day, every day, sort of thing. So like when I start seeing like new headlines pop up, that's kind of when I start like going like, okay, this could be notable. We've had so many individual stock circuit breakers today and yesterday. And I think that was a little bit different from like Tuesday.
And he's right. It's very simple. When you have these headlines and they're causing these crashes, it's very simple, right? But I think in a lot of situations here, people are starting to get a little more level-headed. I think you're going to start seeing some buying now. That's right. You heard BigBeat's say it. Looks like we're going to see some buying here. But for me, it's always been about sucking in that money. Whenever you have heavy volume days like today, especially in the selling side, look, they've got to dump. It's several good episodes on billions, right? I don't want to bring billions into this. When they had to dump a lot of stock, they would stop, right? And they would let people buy it back up. They thought it was cheap, and then they would dump again on them. And these market makers have a lot to continue to dump right now, Ryan. They still have more to dump. They're getting phone calls, and they're not dumping. When they hold back on them, stock pops up, market pops up a little bit. So let's see some wild swings.
Well, Steve, I caught your Facebook thing this morning, and you mentioned something that was very, very interesting to me. You were talking about fear and greed, and then psychology being a very important trait or skill in this market. And I could not agree with you more than that. First of all, I absolutely think fear and greed is what we're seeing play out here in the market. I think we are talking about the fear aspect. We have an overheated market. We have all of these things going on. And then now we have this virus on top of it. You had mentioned that companies were reporting poor earnings, some of the poorest in some time here. So we have a lot of stuff to worry about, and you're seeing that play out. On the other side, people are still, the whole greed thing, people still want to be able to get out with a profit. So if they're up on stocks that have been really high performers over the past year, things like Tesla, for example, I mean, that stuff's going to get dumped because you're trying to sell your winners ahead of trying to sell something that you're going to take a loss on. So
but this market is absolutely wonderful for a patient investor. I mean, 2 years ago, Ryan, I told people that I wanted to buy Boeing at $275. I can't tell you how many people laughed at me and said, "You'll never buy Boeing at $275. I just bought it at $271, right? I mean, I think that when you hear the word pandemic and you hear the word crisis and the world's going to hell in a handbasket, people get nervous, right? And the one thing that everybody says, oh, well, you got to have wealth preservation. Look, blood's in the street, right? Wealth preservation's out the window. They've already lost that money. Maybe it's time to get some of that money back, right? I'm not telling people to buy or sell. I'm just telling them that maybe the fear is overblown. Now, I will tell you the one thing that has kept this market up has been the Fed and interest rates. They have put the sugar bowl in front of so many people and said, look, don't worry about it. We'll cut interest rates. We'll give you more money. Just put it in the stock market, right? You've got the pump from the White House. You got a pump from the Fed. And all of a sudden, great. Now these companies went out and they bought all their stock buybacks, right? It's been heavy. But I was saying, stock buybacks, I said this morning, aren't a bad thing if they took that money and they retired the stock. But not many people did that.
Yeah.
So here we are.
And that's a really good point. Your point about versus buyback leverage versus retirement of stock, that's a really good point. And I mean, there are a bunch of companies that still have billions of dollars of buybacks scheduled to go on. So as far as when you're talking about like the actual fear, like some of the things that I use for fear, especially when we're talking about these viruses, are travel stocks. So I mean, I'm looking at Booking Holdings right now. We're up 2%. All right. That if the world were ending and people would be scared and all of that, Booking would not be up 2% right now. To take that a step further, I look at Carnival Cruise Lines. Carnival Cruise Lines is green too. Now it's near flat. It's barely green, but this thing would be in the deep red. This thing isn't in a huge sell.
You made a good point. I just bought cruise line stocks because
there you go.
On the street. When the hell was the last time you could buy Royal Caribbean at $75? Look, I'm still going to go on a cruise. Look, it's still not, but at $400 a share, that's a silliness, right? SPCE at $80 is crazy. But you know what? Where is space right now? SPCE, where is it at right now, Ryan? It's
SPCE 2450. So it looks like we have SPCE is ripping. We're up 11.5% on SPCE.
Hey, and let's be honest, we're still going to send people to the moon. We're still going to send people to the Mars. These people like Elon Musk, Richard Branson, these guys aren't going away. Yes, they lost billions of dollars over the last few days, billions with a big B. But they're still going to produce. They're still going to do these things. The world hasn't ended. But when I say the market has been so frothy and so fluffed that it's out of control, we weren't kidding, right? And now things have gotten back a little bit under control here. I get it, another 1,000-point day in the Dow here. It's broken all hell. as you remember back in November, Ryan, I said Dow 22,000 was going to be the hold line.
Yep.
So far, we got pretty dang close. And look, we were looking at Dow 30, and everybody's like, "Well, Steve, where's your call for the top now?" And I'm like, today I'm going, there it is.
Yep.
So if you're a trader, Ryan, it doesn't matter the price of the stock. It doesn't matter where the price of the stock is going or what the company even does a lot of times. The one number thing in the stock market is timing. It is always timing, right? Amazon, being $1 trillion company, not quite there. Apple is not $1 trillion company yet, right? But it went there, the stock price, right? Now where's it at? It ain't $1 trillion now, right? It's right around 800 billion, right? That's about a little closer to normal, right? So we pushed the market to a level that shouldn't have gone to. Now the market is pulling back to the right. Now, here's what people don't understand, Ryan. Psychology of the market is exactly right. The psychology of the market, I was taught this a very long time ago by some very smart people in Goldman Sachs. The market is always 6 months ahead of itself. And here we are now. If that's the case, then we're talking summertime and fall, right, before the coronavirus ends. If the market does start to chill out right here, then we know that there's some people that are in the future are thinking that, okay, we will get this under control. We won't need to go running around as if we're a part of a movie of Walking Dead. So I think right now, there's two things we need to look at. Number one is, are these companies that do the stock buybacks, are they going to kick in money now? Are they feeling okay with it? And number two is, how do the Robin Hooders and the Weeblers of the world feel now that they've lost all this money? Will they continue to put money back in? Because you know what? The mom and pops, the 401ks are already doing that. The ones that are on the sidelines are going to put money back in. Where they do it, I don't know. As I said, timing is everything. So if we start to see the volume to the downside slow down and the volume to the upside start to pick up, let's pull up an Elder's Force chart, Ryan. I think, let's do that. Let's pull up the SPY on a daily chart.
Yep, just give me a sec here to get that all ready.
And I'll show you that the force of this momentum was so heavy to the downside, it's got to turn around. Right
now, real quickly, one of the let's talk about that. Let's take that a little bit further, and I'll grab you your Elder Force chart here. I mean, so just looking at this, looking at the S&P cash here, I'm thinking maybe a trade down to 28.50. Looks like we tested that. Looks like we tested 28.55 as the intraday low today. I think that's probably you were talking about, people, I don't know where to get back in. I can't predict the future either. If I could, I'd be doing something else, I'm sure. I can't predict the future, but what I can do is try and look back and see what are potential spots to get involved again. And if so, to do it, smaller, whatever. So I'm looking at the technical side.
Yeah, you're actually right, Ryan. Don't go in big.
Of course not. Of course not. I'm not a big fan of catching a falling knife, but you had mentioned it earlier. Traders want to see some volatility. We've got some volatility. I at least got to try something here. So I'm looking at 28.50 on the S&P. Looks like the intraday low here was 28.55. Looks like we're going to try to make another.
That's where I said, Ryan, on the SPY. People were asking me in the chat room. I said 285.
Okay, and let's go over to the Dow. So Dow, we're looking at what, 24.7. Where are we at right now in the Dow? Looks like we're at 24.763. So I mean, yeah, obviously if we break these lows and it's going to be more extreme. There's some more downside, maybe 23.50 in the S&P, 2,200 on the Dow. We'll see what happens. But I mean, again, like you were saying about the whole volatility, like there's got to be something to play. There's got to be. I want a toe dip. I'm certainly not going to to go in big or anything like that. I would never recommend that to anybody by any means. But I mean, this is it. We've been waiting for this. We knew that the market was overheated. We're waiting for a catalyst. We got our catalyst. It's time to play now. So let me try and bring up your Elder's Force chart here. Give me 1 sec.
I would add two things to that SPY chart. Make it a day chart. Add Elder's Force to it, and add Keltner channels.
All right. So let me get these.
And I think people will start to see like where the fear and the greed is hit. Now, Ryan, there's also a fear and greed. CNN puts it out for money. I get that for you right here. But people have been asking too about the recession. I'm telling them right now, yes, we're going to go into a recession. If you don't believe that, I think you're just kidding yourself, because the actual definition of recession is 2 consecutive quarters of non-growth, right? And then Right now, Ryan, the money.cnn.com's fear and greed index is at 9. That's extreme fear. The worst extreme fear is 0, and extreme greed is 0. That's right, we're at 9. We're at 9% on the fear and greed index. Probably the worst we have seen in probably, oh my God, years. 1 year ago, we saw greed at 72. Extreme fear is now. That was yesterday, was extreme fear. We're even worse than that now. A week ago, we saw a 44 rating there, but this is literally the worst ever. Now, I will tell you something else that I've been watching, Ryan, is junk bonds versus investment grade bonds. And right now, the spread is at 2%. Last time that happened was back in June. So we know that people have been moving into really high grade bonds, which is good because junk bonds have been a problem. I'm going to slack you, Ryan, the fear and greed index. If you could quickly show this chart up there.
Yeah, I'll give it a shot here. I'm actually struggling here with my charting software, so I
Show them the
apologize.
fear and greed index, and I think we'll see what I'm showing. What it's going to show people is what are people feeling right now, and they take several indicators and combine them. The put-call ratios, market momentum, McClellan indicator, which I love McClellan, if you know, because that's the volume of the breadth of the NYSE. And of course, we all know where the VIX is, right? It's over VIX is over. That was called the VIX is over 30 now. I think close to 40. It's crazy, right? And safe haven being bonds, that's extreme fear, right? So, yep. So, yep. Here you go, Ryan.
So here you go. Here's your chart.
Yep. And you can see where back early in 2020, if you go all the way to the bottom of that page, Ryan, you'll see fear and greed over time. There it is. You'll see that it was almost hitting 100. Last time I did that was 2017. So, and we know what happened back then. So,
yeah, but I mean, just to take that example a little bit further, when I'm looking at this chart here and I see all of these very, very steep moves in the fear and greed index, guess what happens? It consolidates and then it goes back up. So I think that that's kind of what we're due for here. I don't think that the world is ending. I do think that there's a lot of stuff that has to get sorted out, but you know.
And that's the whole point, is that not only were we over leveraged, but people were buying calls just to buy calls. I mean, I heard so many brokers tell me that they were so heavy AMD and NVIDIA calls. I'm like, okay, I get AMD, I get NVIDIA, why it's going up. I totally understand it. They're making more processors. There's esports is exciting. But really, you're buying $80 calls on AMD? I mean, like, what are you thinking? Like, they make chipsets for computers, and nobody's going out there right now and buying a ton of computers, right? So I didn't really understand that. And so when I can't understand something, what do, Ryan? I make a trade out of it. So
makes sense. All right. So one more thing here before we wrap this up. Steve, what do you think about coming back next week and kind of following up on everything that we're seeing here? I think
absolutely, Ryan. I'm happy to do that.
Yeah, I think we should do that. And I know we lost Brent here. We'll try and get him back here. Now, I did go ahead and pull up the SPY chart that you were asking for. Let me go ahead and put the Elders Force on. This is not something that I use on a regular basis, so perhaps you can explain this just a little bit here. Was there another indicator?
So let's change. Yep. So I will tell you a second. Change this to a 1 hour chart, Ryan. That's what we're talking about the last, 5-6 days. There you go. You can see where the force of the momentum and the volatility has gone straight down. It has been, we are now at probably the worst levels in a long time. If you'll change it and add one more, keep the Elders Force on, but add Keltner now, we'll see the channel. There it is, Keltner. Yep. We have broken below all those channels, and especially since then, that's been a problem, right? When we were able to see that bounce back there in the 26th, that was the bounce up. But when it got back to that channel, it went right back down. Ryan, if you can't pull it down, pull a day chart up on this.
Yeah, absolutely.
You'll see just how wild this has gotten. That's how crazy this market has gotten, way out of bounds. Now, if you look on the day chart, Ryan, what do you see right there on the day right now? You see a spinning top, a reverse spinning top at the bottom. At the very bottom there, the today's day. Yep, that's right. If you look back on the 23rd, you saw a couple of spinning tops right up there, and you saw an inverted hangman. So these were good examples, and it was consolidating up there, and they were preparing for a sell-off.
And just to kind of go along with your point here, I mean, if we look back all the way into December, we're kind of living above the channel, right? A couple of violations into the channel, we bounced off the bottom of the channel, we're living above the channel, and now all of a sudden that we've broke, we're living below the channel. And remember, as far as sell-offs go, Elevator down, stairs up. And look at the chart that we're looking at here. That's exactly what we're looking at. So this kind of also plays back to my orderly selling. Sell-offs like this, they feel like, oh my gosh, this is going to be really bad. But in reality, this is kind of how they work. And,
Right.
I'm really glad that you suggested these two. These are great.
They're also going to work, Ryan, because the volume is so heavy. If you look at the last 6 days, you'll see the volume picked up. It knew dang well what was going on. The market
Absolutely.
knew. Listen, the people on Wall Street knew what was up, right? And they were telling you on CNBC, hey, it's okay, everything's fine. No, it wasn't okay, right? And I'll tell you something else, Ryan. Go pull up a max chart of the SPY.
I'm sorry, what chart?
A max chart. So if you go to the next of the day, drop that, here you go, and you go all the way there to the month. Yeah, 1 month chart. Perfect. You will see exactly what I mean. Now, if you put this thing in perspective, okay, put the market in perspective, you're going to see back in 2019, back in December, when we were in 2018, December 2018, you will see that it held within those lines. It bounced through them, but it held within those lines. If you go all the way back to 2016, you'll see the same thing. It got in those Kelvin channels and held. As you've been saying, you said earlier, we're living on a borrowed means. If you scroll back even farther back, Ryan, let's go back to 2006, 2007, 2008, 2009. There it is. You see how we went out of that bounds, but we got back into those bounds.
Yeah.
Okay? And that's what we should see. We should see us getting back in those bounds. But right now we got to wait until the fear is over. If you look in a monthly chart, Ryan, how is the volume compared to volume in the past?
So right now, we are on the monthly chart right now. And right now, the volume compared to, especially some of those times that 2008, 2009, a little bit different. But we're much lower on the volume. So
That's right.
So I think one of the things that you're trying to say is there might be some more to go. Am I reading you correctly?
A little bit more to go, yep. But I'm telling you that they're going to bounce right out of this. The economy, yes, we're going to go into recession, but it's not as bad. And I'll tell you why it's okay. Because we're the only game in town. The rest of the countries aren't doing well. Germany, Japan, all the big ones that have big exchanges. London's hurting so bad that they moved their finance out of London due to Brexit. It all went to Frankfurt, right? So now we're down to Japan. Now we're down to Tokyo. And now we're down to the United States, right? And the France COC 40, not so much anymore, right? So pretty much we're the only game in town, and people are going to put their money in the United States. So yay, America.
Okay, well, Steve, let's end it on Yay America. That I like the positivity. I really enjoy that. But let's make a commit. Let's come back next week and kind of re-examine where we're at. We'll see if there's any more news that the market is trying to digest in the meantime. We'll see what else has played out, and then we'll re-examine some of these levels and see where we're at and try to formulate a thesis. I know you're big on theses, so let's do that. All right, how does that sound?
Absolutely, I can't wait for it. Yep.
All right, sounds good. I would say that the message that I would leave people with here is just relax. Just relax. Don't try to do anything crazy. Don't get too excited. Think before you act. And as Steve said, I think everything's going to be fine going forward. Just relax. How does that sound, Steve? You got any parting words for the group?
Yeah, look, well, I've been doing this a long time, Ryan, almost 30 years now. And I can tell you, I've seen the ups and I've seen the downs. And nothing is different. You can say, oh, well, it's different this time. It's not. It's all the same, right? It's fear and greed. It is based on psychology. And as I always say, Ryan, what's my favorite saying? This too?
I always have a thesis.
Yeah. But what's my favorite saying? This too shall
pass. Excuse me.
This too shall pass. That's right. One of my favorite Bible verses. So look, let's be honest. This too shall pass.
All right. Sounds good. Now, like I said, we will be back next week. We will re-examine some of these. I really want to thank everyone for joining us today. Till next time, happy trading.